We are following breaking news. All three major American stock markets have closed down for the day after President Trump took questions about tariffs going into effect tomorrow against Mexico and Canada and new tariffs coming against China.
You're gambling with World War III. You're gambling with World War III.
We are just weeks into the second Trump administration, and it already feels like we're living in a very different world than we were at the start of 2025. What does all this uncertainty mean for our super funds and the money they're managing on our behalf? Hello, I'm Rebecca Jones. Welcome to the Bloomberg Australia podcast. This week, our superannuation industry already has a massive $4.1 trillion of assets. It's growing so fast, it's forecast to become the second largest in the world by as soon as 2030. But what will it look like for you and me as members of those funds? And how are the guardians of our retirement savings adapting their investments in a time of rapid global change? To help me answer that and more is Bloomberg star superannuation reporter Amy Bainbridge. Welcome back to the podcast, Amy.
Thanks, Beck.
Amy, we know there's billions of dollars of our money pouring into super. Where is our superannuation money likely to be invested in 2025?
You're right, Beck. Inflows are huge and they're only getting bigger. And it's worth remembering that the superannuation guarantee is actually going up to 12% in July this year. So that's where it's going to top out. But the money coming in, we're talking about billions and billions of dollars. I've spoken to a number of CIOs and CEOs over the past couple of months. Look, it won't surprise you that there is a really big focus in offshore markets and also in private markets as well. That's the stuff that's not in the listed markets as we know it. Big funds like Aware Super, Australian Retirement Trust, UniSuper, Colonial First State, they're all looking to increase their unlisted markets exposure in 2025. Some are looking to get back into property. Infrastructure is another big one. That might be anything from data centres to batteries to airports to toll roads. And they're long-term investments that will make a good amount of money for them along the way.
So on the topic of private markets, the Australian Securities and Investments Commission, otherwise known as ASIC, has had a bit to say about that recently, haven't they? Let's take a quick listen to what ASIC Chair Joe Longo said on Bloomberg TV about this last week.
We want our superannuation funds to be investing globally and locally, and depending on which fund you're talking about, between a quarter and a fifth of their AUM are in private markets. They're in private, not listed assets, and so we don't want to discourage that. We want to understand it, and there's been some talk in this sector of frothiness in the private markets, and we want to understand whether that's an emerging issue or creating risks.
Amy, what are ASIC's key concerns about super being pumped into these unlisted markets?
Concerns have been swirling for years, really, and mainly it's about the opaque nature of private markets. So, of course, in public markets, you can see what a company is worth every day that there's public trading. But in private markets, there's been concerns about how frequently assets are being valued and who is doing those valuations as well. So in a really basic sense, if you're someone who's taking out your superannuation today, your super will be worth a certain amount. And there's quite a formula behind that known as unit pricing. That's not something we'll go into necessarily today. But say you're someone you've withdrawn today, you get your money out. But if you're a younger member in for the long haul, what if the asset that you're invested in hasn't been valued accurately? Does that mean that you might be in a disadvantage in the long term? So that's one of the key questions. The regulators kind of talked about the frothiness of private markets.
What does that mean?
How do you really know if a super fund is perhaps paying too much and really just not having true visibility over how they're valuing things at certain times and how frequently? ASIC and APRA, the other regulator for the superannuation market, have both been speaking about this for some time, and now there's been a discussion paper released from ASIC trying to really get some good ideas around the private markets itself, but also what's turning some of these big investors off the public markets. Are there some regulatory settings, for example, that should be tweaked to make those more appealing?
And what did they find? What were the key takeaways from that most recent report?
basically what they're saying is that with this concentration and fewer super funds, it can be really hard to make like-for-like comparisons in terms of whether they're overpaying in the private market space compared with public markets because of the lack of public reporting by private capital funds, for example. So, performance is often measured, or really measured, after funds have been returned to investors, which is, can take 8 to 12 years, they say. So, and then there's the fee issue within that as well. So there's a whole bunch of issues that, ASIC is really examining to make sure that the markets are running effectively and that they're as transparent as they can be, not just for them, but for consumers as well.
So, as I understand it, if you had a listed asset, let's use, just for argument's sake, like Domino's Pizza, which is a listed fast food company, you can't really compare their business and how they're valued to a private franchise of pizza shops. It's not a like-for-like thing. There essentially needs to be a whole new methodology created by regulators like ASIC and APRA to value these assets.
This is kind of the other point that's made in the report, is that markets globally are probably a little bit further down the track than Australia when it comes to having these processes in place. This is something that the US, for example, they say it was looking at like 10 years ago. So, we in some ways are playing catch up, but also if you look at any changes that might need to come into effect, it probably won't be much of a stretch, you'd have to think, for some of the biggest funds who are already investing privately overseas to then have their reporting requirements potentially change here at home as well. So I think it will be really interesting, I guess, to see what comes out of this. But certainly the regulators have repeatedly spoken about this issue. And so it finally seems like they're really trying to get some action because they're not particularly happy with the way things are running at the moment.
Interesting. I want to pick up a little on what you said there about super funds investing overseas. And one theme that I have seen come up a fair bit in your coverage of super funds, Amy, is their ambition to go global. We've just seen this super summit happening in the US. Now, that involved some 10 Aussie super funds in a roadshow of sorts across Washington, DC and New York. The point of it being to showcase their desire to increase investment in US infrastructure and assets. Why is it important, Amy, for these big super funds with all this money to host these kind of events?
So geographically, we are such a long way from the key investment markets. So what we have seen is, the top funds in Australia have actually opened offices. So they've got people, employees on the ground in New York and London and other cities around the world. That's number one. And one of the things that is a challenge is that even though we've got a ton of capital here, we don't have great brand recognition in some of those markets. So when you're trying to employ really great people, you need to have competitive salaries, but also some brand recognition. So having offices in those markets is key, and developing then through those offices contacts to get access to deals in a hugely competitive marketplace. For example, the Middle Eastern sovereign wealth funds, they're now global players. They're chasing deals that, they may be competitors to our Aussie super funds. So it's really important that you have a presence. Even this week, Steve Schwartzman from Blackstone said that he'd met with the 9 super funds and then the Future Fund, which is our sovereign wealth fund, over there, noting that our industry is booming. And the delegation that was over in the States, they spoke with 2 Trump cabinet secretaries, 3 state governors, and a whole bunch of investment leaders. And really, it's about the opportunities, but it's about being known. So you're getting access to those deals. Already, there's $400 billion invested in the US. Research released around the time of this summit says that is projected to grow to $1 trillion invested in the US by 2035. So it is a huge amount of capital. And it also speaks to the fact that we have, in some ways, the industry has in some ways outgrown our domestic market. So they're really hunting for those opportunities. But you've really got to be front and centre over there to get access to the best deals.
And what are these super funds, these Aussie super funds, telling you about how they're navigating this new Trump administration? I mentioned right at the start, and also, these various market ructions that we're seeing come from that.
Yeah, it's interesting because you speak to the funds and they say, look, we are long-term investors, we can't worry too much. But, you have to be have your head under a rock to not be thinking about how this environment is going to play out, because we're talking 4 years, we're not talking 4 months. It's one thing they've said to me repeatedly is that they're bracing for more volatility. So we had Kelly Power, the CEO of Colonial First States superannuation business, on Bloomberg TV this week. She said, it's not our first rodeo with volatility, but one of the real challenges is keeping members calm and not thinking that they need to switch their investment options, in reaction to things. So there's that. There's the member element of it, but there's also the investment decisions that you make as well. There's challenges including currency fluctuation, because even if you're investing overseas, you still need to pay out eventually in Aussie dollars. So a lot of funds have said that they're seeking a bit of protection from those kinds of things. And we had a story recently about some of the big funds being attracted more to Aussie bonds due to their haven qualities and the interest rate cut prospects here in Australia, and sort of that added protection against a global economic downturn. So it is really interesting that some are now looking a little bit inward as well, while they are kind of still focusing on the overseas markets, but sort of seeking that local protection to ensure that, they can ride out this period.
Yeah, it does seem that Australia is looking pretty appealing, though, to these funds. Is it an element of the protection that you just mentioned that explains this tendency?
So one of the things that one CIO said to me was Australia, and this was, I guess, kind of before we had some of the tariff back and forth, which has evolved over the last month or 6 weeks or so, but they were seeking protection outside the direct firing line of any trade war. Now, I guess your perspective on that depends who you would speak to, but Australia is still seen as a very safe market with very good governance, and the funds will repeatedly say there is opportunities in the electrification of Australia, so the renewable energy piece where we need, better power infrastructure, for example. Data centres locally, we've already seen some of those deals. And there's other things as well, warehouses, that's another big trend, with the online shopping phenomenon. There's different needs now for warehouses to be closer to consumers, so delivery times are shorter. So these are all the kinds of assets locally that are pretty safe and deliver, pretty good long-term returns, they would say. And on top of that, we already know that some of the biggest super funds are significant stakeholders in airports, for example, in Australia as well. So they'll all tell you it's about that sort of real diversification, probably more than ever, right? Because we know that last year, for example, was a great year on the stock market. Everyone did very well out of that. But how much longer has that got to run? What else can we do to make sure those returns keep flowing? And it does look like the domestic market's pretty appealing.
It's a never-ending search. We've talked about home and away as both good destinations for our precious superannuation accounts. But when we come back, Amy, we'll talk about how our nest eggs might feature in the upcoming federal election. You're listening to the Bloomberg Australia podcast. And welcome back to the Bloomberg Australia podcast. You're here with me, Rebecca Jones, and Amy Bainbridge, who covers our $4 trillion superannuation system here from Bloomberg's Melbourne Bureau. Amy, how likely is it, do you think, that superannuation is going to feature prominently in the upcoming election campaign?
What we know is that housing and housing affordability and the cost of living are huge issues. And one thing that the coalition has already put quite firmly on the agenda is this talk of using superannuation money for a home deposit. So if elected, the coalition has said they will allow Australians to access up to $50,000 for a deposit. Now, the industry is vehemently opposed to this. They've put out various pieces of research saying that it would simply inflate house prices. I guess it remains to be seen how much this will feature in the campaign. But housing affordability is really such a hot button issue, and it is frustrating for people, who feel they could enter the market if their money wasn't locked away. And we also know through various parts of research, including from the Grattan Institute, that renting in retirement is a real issue for a lot of people who haven't been able to buy a home. So that's kind of the goal of the coalition's policy. It's to get people into their own homes and alleviate that cost of living burden in retirement somewhat. I guess we'll see how big a feature it becomes in the election campaign, but I do suspect it will be quite an important talking point and something that resonates with a lot of possibly younger voters or people who are possibly mid-career that have a decent nest egg saved up and they wish that they could use some of it for housing.
What about Anthony Albanese and the Australian Labor Party? What have they been saying about the future of superannuation in what we've heard so far, mindful that we don't have an election date yet?
During this term of government, Labor has legislated the purpose of super, and that's really to try and stop those kinds of, I guess, raids on the system, they would say, to happen in the future. So I think you can see from that the two sides are diametrically opposed, and that is why it could become a bit of a flashpoint in the election campaign, because they're worlds apart. And you have to remember that the superannuation system was largely born out of the labour movement, the union movement, and set up as compulsory by the Labor Party. So they really see it as a Labor legacy they're very proud of. The coalition has said that they do think it's unfair that, people just can't touch the money that they rightfully are entitled to until they retire.
So the super funds have gotten out of the gate strong, straight into spruiking for business in the US. They're also pretty keen on balancing that with some opportunities at home. We've seen our two regulators, ASIC and APRA, come good with some words on paper to start formalising the tricky business of valuing private assets. Consolidation in the super industry is also adding to the complexity there. On the political front, we've got Peter Dutton, the contender, on one side saying super for houses, and Albanese on the other saying, hey, let's keep that money for the purposes it was originally intended for. Amy, finally, what is next on the calendar for us to be watching in the super space?
Okay, so we have a few key industry events coming up, but I guess the next big news will be, at the end of the financial year, a lot of the super funds have become quite public around their results, particularly when they have really good years. We did see some really strong results in the middle of last year, and it will be interesting to see how a lot of them perform this year. So that'll be around the mid-year, and it will be good, I guess, to get a gauge on how much the stock markets are still fueling strong returns or whether there are other factors at play by then that are impacting that final number.
And we'll be following along. Amy Bainbridge, thank you. And thank you for listening to the Bloomberg Australia podcast. I'm Rebecca Jones. This episode was recorded on the lands of the Wurundjeri people of the Kulin Nation. It was produced by Paul Allen and edited by Chris Burke and Ainsley Chandler. Don't forget to follow and review the show wherever you get your podcasts and sign up for Bloomberg's free daily newsletter, Australia Briefing. Go to bloomberg.com to subscribe.